Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at Iron FX, bringing you the morning comment for the 16th of March. FOMC delivers a hike but offers no hawkish hints. The FOMC raised interest rates by 25 basis points yesterday, as was very widely anticipated. However, the decision was not unanimous, with Minneapolis Fed President Neel Kashkari dissenting. Policymakers did not accompany the rate hike with the hawkish signals many market participants may have expected, and as such the US dollar plunged and continued lower during Chair Yellen's press conference. The key message we got from the committee was that this hike does not reflect hate and optimism on the economic outlook and does not imply that future rate hikes will be faster than previously anticipated. The dot plot was left largely unchanged, and Chair Yellen shifted to a much more cautious tone in her press conference compared to her latest appearances. Dollar-yen plunged following the cautious signals from the Fed, and during the European morning Thursday, it is trading slightly below the 113.50 barrier. The pair remains within the sideways range between the 111.60 and 115.50 obstacles, and thus we maintain the view that the near-term path is sideways. Nevertheless, given that the pair started sliding after testing the upper bound of the range, and bearing in mind that the Fed helped the slide to accelerate, we believe that the bears are likely to remain in the driver's seat and continue to pushing the battle towards the lower bound. For now, we expect a test at 112.85, where a clear dip could open the way for the next support of 111.90. Now, with regards to the Dutch election, Eurozone's first political risk for the year is out of the way, as the party of the current Prime Minister retained the most seats in the lower house of Parliament. Although the Eurosceptic candidate Wilders also received notable support, his showing was not as strong as most polls suggested. Coming on top of the cautious FOMC signals, this political development added some more upside pressure in euro-dollar. The pair was initially lifted by the FOMC signals and got another boost by the election result to break above the resistance now turned into support of 107.10, marked by Monday's peak. In our view, the outcome of this election could take some momentum away from the campaign of the French Eurosceptic candidate Le Pen in coming days and thereby keep the pair supported. The fact that euro-dollar rebounded from slightly below 106.30, the upper bound of the sideways range that contained the price action since the 17th of February, turns the short-term bias back to the upside. If the bulls prove strong enough to overcome 107.55, then we may experience extensions towards the key resistance obstacle of 108. However, for now we remain cautious that a corrective setback may be looming, given that the latest surge appears overstretched. Overnight, the Bank of Japan kept its expansionary monetary policy program unchanged, and its assessment of the Japanese economy more or less the same as the previous statement. As for the rest of today's events, we have another 3 central bank meetings on the agenda: the Bank of England, the Swiss National Bank, and the Norges Bank. So let's kick off with the Bank of England policy decision. Expectations are for the Monetary Policy Committee to keep policy untouched via unanimous vote, and thus we expect market attention to quickly turn to the meeting minutes. We believe that investors will look once again for hints with regards to the official's outlook for inflation, but we don't expect them to find any material changes compared to the previous minutes. Turning to the S&P, we expect this bank to remain on hold as well amid an improving economic outlook. Despite the latest improvement in the profile for inflation, we doubt that it will be enough to lead to a material shift in the bank's dovish rhetoric. We still expect the bank to reiterate that the franc remains significantly overvalued, something that is likely to keep any positive reaction in the currency relatively limited. Now let's carry on with the Norges Bank. When they last met, policymakers noted that there are prospects for inflation to be lower than projected, and that this could imply a somewhat lower interest rate. However, they balanced that dovish sentence by saying that a lower rate increases financial stability risks. Since then, data showed that both headline and core inflation have slowed significantly, Thus, the bank's bias may shift to dovish in order to reflect the slowdown in inflation, which could bring a knock under renewed selling pressure. Nevertheless, we believe that the aforementioned stability risks are likely to keep the officials' fingers off the easing trigger, at least for now. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.